morning. Good morning. Welcome back, everyone. We are doing a follow up video on Bitcoin. Today is Sunday. It is the weekly candle close. So, depending on where we close today, we will start setting up for the next week and the next basically monthly close in general. I am gonna make a pretty long video today, so please bear with me. I'm gonna try to go over everything I am thinking about on Bitcoin moving forward. If you like these videos, guys, please leave a like, subscribe to the YouTube channel if you haven't already, hit the thumbs up button so you get the notifications as they drop. If you have any questions or concerns, leave it in the comment section below. All our affiliate services that we use and recommend is also in that section in the description of this video below, alongside all the other social medias that I have, such as Instagram, um, Snapchat, Facebook, Twitter, all that good stuff. It's over there. If you want to see what I'm up to outside of the screen, you guys can see my life. Come enjoy with me in Aries, my good companion. Um, what else do I gotta say before we get this going, guys? Yeah, other than that, leave a comment in the comment section below. Let me know how everything is going. If there's anything I can improve on, let me know. If there's another asset you would like me to cover, let me know. This weekend we did Tesla and Nvidia. I really hope you guys watch those videos and kind of understand what I'm looking for in the equity world. That way, if that money is in risk on mentality, they will definitely add more risk into more riskier assets such as crypto. So if money is being put into those assets at tops like Nvidia and Tesla, if people are buying and holding and continually buying, as it goes up and it becomes too expensive, they will look for better places to put their money and they'll rotate it, such as into crypto like Bitcoin, ETH, Solana, etc. Ripple, etc. So just keep that in mind moving forward. Now, what I want to point out, we've already done doodles on this, right? I'm going to turn on the doodles. If you have any questions or concerns, feel free to go look at our old Bitcoin video. Everything should be explained in there. But I'm going to turn on the doodles so you can see this is what we were already looking for, okay? On a weekly time frame. The second we lost 85,000, the next target was 75,000. We're already doing that nonsense right now. If we are to look for a local low to be put, we will grind out this low over here between 75,000 and 84,000, and then we will eventually tighten it down and then break out. If that is a possibility of a local low. Now you can already see the likelihood of this is like on a weekly time frame, I would say it is possible that we put in a local low here just to test into 84 to 92 to put in a another resistance, like another rollover to basically test, yes, we are going to roll on down from here. That is a possibility. So right now, are we building up a short squeeze is the only way that we would do that, dead cat bounce, okay? And in my opinion, Wednesday this week is FOMC. If you guys are not aware, the Federal Reserve will be discussing a rate cut. I, in my opinion, think that they will cut the rates since they didn't in the last meeting, and that will instantly help the markets get flooded with uh, cheaper monetary policy, allowing them to have risk on mentality, having the ability to actually put more money in the market for that influx to come. That will occur if the rate cut occurs. If the rate cut doesn't occur, people will tighten down their spending. They will put more cash in the side depending on where the economy goes in the next month until the next meeting occurs. That's how I would play if I was a person of wealth to protect my wealth. The uncertainty is the interest rate. The interest rate controls everything else that I have to do in my life and world, because if the interest rate is down and bonds are higher, why would I risk cash being sitting on the side as to putting it into a bond and getting 5 to 6% return guaranteed? Why would I put my risk in the stock market expecting 8% on average return when markets are at all-time high? You know, the the reverse can happen. Instead of me looking for an 8% average yearly return, this could be the year of a correction. We could be down 20-30% at the end of the year. So it will erase 3-4 years of your progress if you are bad at timing your entry and exits in the market. So just keep that in mind. That's all stuff for you to be aware about for Nvidia and Tesla and stuff like that. Okay. Now, how would I know if we have upside a continuation or not? The risk is basically 75K. No one will know, hey, we're going to go up or down. But if I was to manage my trade and I was to take a long over here, because a lot of people took this long, guys. I'm telling you right now, a lot of people who were patient on the sidelines did go ahead and take that trade because they've been patient, and they are pretty sure that, hey, the bottom is in. So they're looking at this trade right here. They took a long stop loss a little bit under 74,000, and they're looking for it to go into 92,000 for them to take their profit. And then over here, if it goes higher, they can re-long at 92, 93, or they would start taking a head short to go retest back into 74, 75,000. This in itself is a 5-to-1 trade, and that's about a 20% gain. This is literally what RGTI did on Friday, which is why I sold it for a 20-25% gain. And I think it went up to like 30% for the day. But I got out early in the morning because I was like, I'm not even going to watch this anymore. And the reason why I did that, right? When I do these IRA trades in my stock portfolio, it takes 3 days for those funds to clear for me to even reuse those funds for the next scalp. In crypto, your funds are there right away. But I have to know that, yo, I have to time this properly, because if you do two trades with the same funds, you will get hit with the PTD classification pattern, day trading pattern, whatever they want to classify you with, whatever your exchange you're at. But if you're a day trader, if you're buying and selling consistently within the 2 days without your funds clearing, you will get hit with that, and then your account will get restricted until you put above $25,000 liquidity in there. You can't do those kind of day trades without having above $25,000 in your liquidity. Like, that's the barrier to even become a day trader. Anyone who wants to day trade, they can't day trade unless they have 25K plus. Okay. Otherwise, what you have to do is you have to wait 3 days for your funds to clear for you to take your next trade. Crypto does not have these rules and restrictions, which is why you can scalp pop 5 times in a day, 10 times a day, make a quick 100% per scalp on leverage, and go away after lunch and then do that the next day kind of situation. I usually only trade 4 hours a day. I cannot sit in front of a computer and put all my time in life. I used to trade like that. I used to be in trades for a whole week long, and it would just ruin my mentality. And it's like, why am I destroying my health for a little bit of gain? The money is not worth it at that point. It's opportunity cost. Opportunity cost. So a lot of people are trying to do this. I do think that this is a good opportunity, but you can see this white line is a barrier. The people who are looking for that 92 for take profit might get rejected right here at 85. So this is why we are consolidating between 85 and 75. Okay, that $10,000 range is exactly what I expected to occur from like the last few weeks we've been doing this video. And I already said that, hey, we have lost this in the past before, because I'm going to show you ETH in our next video. ETH is like over here in this territory already. Bitcoin has still to come into this. Bitcoin doesn't have to come into this if Bitcoin stays market leader and the king of all the crypto, and holds the liquidity, and all the other things wants to go dip down and take more liquidity. That's fine. But if you lose 74,000 on Bitcoin on a 4-hour open and close, I would immediately tell you, hey, you need to be aware that $60,000 area is the next logical target, and it could even go a little bit lower. And this is only possible, okay? My rule and condition for this is there has to be no FOMC cut. If on Wednesday at 2 o'clock there is no FOMC cut, you guys need to prepare yourself for the markets globally to punish the Fed into a rate cut the next time. That is my 100% honest prediction. FOMC cuts, we can see upside. If no FOMC cuts, we will drag the markets down into the next liquidity pool to hurt everyone who bought the dip thinking that the low is in. Okay, that's the gist of the gist. Now, I gave you my rationalization. Now, how do I prove it? Okay, let's go to monthly. Okay, here's Bitcoin on a monthly. You have, yes, a little bit of divergence, bullish divergence. Okay, little bit of bullish divergence, but that still cannot be confirmed for another 15 days. So for 15 more days on a monthly time frame, all Bitcoin is looking for is $65,000. Okay, $66,000. That is, and you can even hire it to like 70. Okay, I'll give you 70K, because at the monthly close, this will tick up maybe like $500 to like 67, maybe 66, 5, something like that. So just I'm gonna give it, $70,000 as a fair area for us to tap into for liquidity before the monthly closes. If monthly closes like this, okay, next month I'm still gonna look for liquidity to come to 75K, test it, confirm it, then we will go bullish engulf on the monthly. Okay, so next month, April, if April showers bring May flowers, we will see. But March is pretty much sideways and down. And until I get my confirmation in about 3 days of what the FOMC is going to do, I am only looking at sideways and down. And this level right here, 75K, is the best possible level of support for you. After 75, I'm looking at 70-ish. Okay? So that is just honest opinion. Now, the only way we can look for this upside to come without downside to come is if a big buyer steps up and helps create that bullish divergence that I already showed you that was occurring on the monthly, but they have still 15 days for the monthly close. But in that 15 days, if they accumulate the next 2-3 weeks in this sideways range of 75 and 85, what they will do is when the monthly closes, it will be a doji monthly, and the next monthly will open and continue. And that's the only reason I'm making this video today. Today at 8 p.m., this weekly candle will close and basically be a doji after a liquidity grab. Next week, it should be going into 84, 85,000 to 92,000 to put in a dead cat bounce rounding top for the rollover here. For a rollover here. If it does not roll over there, then we are basically looking at us putting in a local low, and we will start making this inverse head and shoulder for the upside. Now, I'm actually going to doodle that right now. Remove this. We don't need that one anymore. Remove this. We know that we're making a range in here, right? So what I'll do with this one is throw you a channel. The channel is literally this. Boom. So we have that channel that we're looking to long. I'm going to delete this. Cool. This is the warning that we can round and down. This, I don't know what the heck this is, but I'm removing that. This is what we expect to play out if we round out here, okay? If this rounds out here, I don't know how to color this. Okay, if that rounds out here, that means we are officially in the nuke town. Like, basically, rolling hill distribution is what I call it. It goes like this: 1, 2 legs, and then 3 legs. Okay, 3 legs down, and then it turns into an inverse head and shoulder accumulation for the breakout. That's how I usually play it. So technically, you got your first leg right here. Oops. Oh man, why does this always happen? You suck. Okay, we got our first leg down right here. This is okay. This is Wyckoff. 1, 2. 2 is the dead cat bounce coming back into it to test it. 3 is coming back and taking out the low, and then that is officially the end of the ABC. And then we're looking for 7 waves back up in Wyckoff. That's why I have this little green doodle over here, is because I was always expecting the liquidity to be taken to the downside. It's just everyone was so bullish and I'm like, dude, just you're so impatient. You have no idea what the heck is going on. You're just like an ape. Go ahead and ape. So enjoy being an ape and a retail ape and not understanding what the institutions are doing, and they're messing with your emotions while they're trying to do what they're doing. So I hope you have good emotional regulation. All right, so that's basically what I'm saying. Like this could roll on over. We can look for this inverse head and shoulder accumulation and then rounding bottom out. And that's basically all I see right here. There's no really too much to discuss. If this comes up here, puts in that dead cat bounce, you're gonna take the liquidity out here. You might even do it like this and then come down here. Put in a head, a shoulder, and then recoup. Okay? So something like that is possible if we basically just want to take that liquidity, like touch it and then go. If you lose this level, it's done. Like then you have to be very concerned about how deep the liquidity grab will go, because it's basically going to be capitulation. You're going to have too much liquidity flooding to be cashed out at the same time. And it's just going to hurt. I would probably lower that to that, and I would lower that to that for now, and I would make this the next liquidity hit right into this low 60K area. So that's how I'm going to be looking at it, and that's how I'm going to be playing it. I mean, you guys can do what you want. Obviously, you guys look at our previous videos, you will see how many times that I'm just like, I don't think so, not now. And then you guys get these capitulation candles that are like, oh, you were right. Yeah, dude, it's because the thing was already telling you it was trying to distribute. Look at this distribution. This was a fake out, right? But you would have known that if you were trying to short this, I mean, if you're trying to long this, your stop loss would have been underneath the EMA. If you're trying to short this, your stop loss would have been 74,000. This thing liquidated everyone in a short squeeze. So that's why I was like, okay, once we left 85,000, it's trying to do a new top. That's where from these levels, I came up with this top here from 109 to 120. That's why I was targeting 109 to 120, and we basically tickled 109 and then rolled over back into the next order block underneath 92 to 75. So this is just one leg down, in my opinion. We still got at least one more leg, but possibly a third leg, and it's gonna be on a monthly. So for March, I'm looking for sideways. It's April that I'm looking for that next death leg down, and then I'm looking for it to come back up at the end of April into May. So that's how I see this playing out, guys. And another last tidbit, okay? Dixie. You guys been watching Dixie? Exact dump 1-to-1 almost to Bitcoin. And look at what's going on right into our accumulation, right? Rounding bottom. How many times has this done this? If this doji sets and we're actually looking for upside from here after the rate cut, you should expect all assets to go up. Nvidia, Tesla, gold, Bitcoin, everything. Everything will rally up because they all are now trying to show you that there is no inverse relationship. Freaking Bitcoin has now become a reserve asset, right? So it's considered a currency asset or a basket. It should be considered in the basket of currency of all, like, the world, because it's all the world using it as a basket currency, not just the US. Its companies are using it as their treasury. Like, insanity. The reason why I came back here is I wanted to show you gold real quick. Where is that? It's not on this one. XAU. There it is. CME. uh why am I doing this wrong? There you go. All my doodles are not here. Oh man. Where did I have my doodles on gold? Alright, it's okay. Let me just show you real quickly what I'm looking for. Let's just say, like this is what is happening. So we're already here at a resistance here at 28,925. Okay. Yes, we can go to 33.92, but this is what I'm looking for. If the cut occurs, more than likely you'll be putting in a top over here. Okay. You're gonna have to come in and retest this liquidity. You might even come all the way down here and then do one of these things and then reverse back up into that level. You're not just gonna just moon on up like this because you have to use common sense, man. Just ask yourself, like realistically ask yourself, do you think gold is about to go up like $600? Does gold move like that? You can even see as you're coming to this top over here, your freaking volume is starting to dissipate in a bearish divergence as you're coming into the top. So, all of you people who are in gold, if you have common sense, you will be taking profit. You will be taking profit because once the interest rate cuts occur, gold, which is a risk aversion asset, there will be no need for a risk asset or an inflation hedge if the interest rate is being cut. Because when they cut it, the monetary policy will lose, and then you will be looking to put risk on, not risk off. Gold is a risk off asset globally, okay? Globally. But when the whole world decides to put money back in the market, they're going to be selling off all their gold and they're putting it into stock and equity. CEOs of the world have their money in shares of the companies, not in gold and not in cash. Equity, the shares. That's where the real value of the wealthy people come from, is because they take that equity that they own and they borrow against it, and that's a tax-free event. But if they were to buy and sell their shares for money to buy their house, they would take a tax hit, and that means they're losing even more money. So just be aware of that moving forward, guys. And I'm going to end the video here. If you guys have any questions or concerns, leave it in the comment section below. If you are interested in trading with me live, please feel free to join the Discord server. The link to the Discord server is in the description of this video below, alongside all the other affiliate services that I use and recommend that helps this channel grow. So thank you guys so much. Last but not least, if you could hit the thumbs up button, hit the subscribe button, hit the bell button for the notifications as they come out. Leave a comment in the comment section below to let me know what asset I should do next. And yeah, in general, share these videos with other like-minded individuals. I would greatly appreciate it. It helps the YouTube channel share my videos with others. It helps me grow, and that is what motivates me to keep doing this videos in the future. The fact that people are watching them, the fact that people are actually gaining from it, preventing losses, gaining more profit. Like there's nothing that makes me happier than when the people around me are making money as well as me, right? Because then you're not going to ask me for $5 to pay your phone bill. You have your own $5 to pay your own phone bill. Maybe you have $5 to buy me a coffee, because I don't drink. So, buy me a coffee or buy Aries some dog treats. That's all that matters to me at this point. As like my positive contribution to the world is me trying to assist people and show them the things that I learned and that they don't repeat those mistakes. I'm trying to teach you guys patience. I'm trying to teach you guys that don't fall in love with one asset. There's all these coins and every single one of these stocks, every single one of these cryptos is an asset. It's a car. You're putting your money in this car so the car goes up in value and you're going to sell the car, take your money and do it again. That's all every single one of these things is. All you freaking Ripple fans or Pepe fans or Bitcoin fans or ETH fans or whatever coin fan you are, I don't care. They're all just stupid tickers to put my dollar in to make more dollar and to sell that shit out, because all of those things are absolutely useless internet monies. They don't do anything for you yet. The hope is there that this currency will become a hard asset that we can exchange for goods in the future. But that means the dollar is dead, or gold is dead, right? Or the barter system is dead. There's so many systems that need to go out before you can be like, yes, it's only going to be Bitcoin, or it's only going to be Ripple that is going to be the currency of the world. Okay? Bitcoin, Ripple, all of those things are technologies that can be duplicated with the one click of a button. If the whole world agrees on one new currency amongst the central banks and the world powers, that new world currency, it can be printed with a click of a button, and it doesn't need to be based on Bitcoin or ETH or whatever. It doesn't need to be based on anything other than what the hell they established, because that's how they work. They created money. They created Bitcoin. They created the rules. Ain't nothing gonna change for you guys, okay? The only thing that can change is you understanding how the rules are established, how the taxes on those rules are established, learning the game, and then using it to your advantage. That's how the rich make billions and pay zero taxes, is because they understand the rules of the game and they use it to their advantage. It's only the people who work check to check $35 or 35 to 50,000 a year, then they're paying 30% of that tax back, and then they think like everything is peachy keen. If you make 35 to 50 a year and you didn't take your $8,000 automatic deduction in your IRA, if you didn't itemize your deductions to make sure you get all your money back for like your gas, your food, your rent, your insurances, like if you don't know how to operate a business and take your payroll check and put it into your corporation and pay yourself through your corporation, where you have a job paying you payroll, and you're taking your job's payroll and putting it into a corporation, and then you're the employee of your own corporation taking payroll out. Now you have a source of income and you have business credit, because you're paying yourself through your business, and then your business is paying you. All these things, if you don't know the rules of the game, you don't know how to take advantage. If you did this way, not only is your company paying you, but when the company fires you or downsizes you, your company that you established where you were getting paid through now can take all the COVID rebates and EDIL loans, all of that stuff you would have been able to take advantage of. You would have been able to take $150,000 for free from the government, or $50,000 free for the government, just to keep you afloat while the other companies fired you. And all of this stuff would have not even had to been paid back if you can show that it was properly used for payroll and rent and utilities, etc. So that's the point I'm trying to make, guys. I don't think this is a good long right now. That's the gist I was trying to say on gold. I do think this is worthwhile for you to start a long entry position at around 75 to 85, between 75 and 85, but just be prepared for the lower 60s if that occurs. Like, there's no guarantee saying 75K is the bottom. You can go a little bit lower, and if we do go a little bit lower, be ready. This is the Discord server that I always talk about, guys. Hopefully that pulling this up didn't ruin the video. But yeah, guys, I hope you have a great one. I'll see you guys in the next one. Let me know how everything goes. Adios. Be safe.